Welcome back to our QuickBooks Online tutorial series. Today we're diving into how to receive payments for invoices you've issued to your clients. Imagine you've recently completed a project for Amy's Bird Sanctuary and issued an invoice for $239, due on December 16, 2024. Today, on January 4, 2025, you've received the full payment and it's time to record this in QuickBooks. First, you'll navigate to the New button located at the top left corner of your QuickBooks dashboard. Here, you select Receive Payment, which is categorized under the Customer column. This action opens the payment recording interface, a streamlined screen designed to process payments effectively. Once it opens at the top of the Receive Payment screen, you start by selecting Amy's Bird Sanctuary from the Customer dropdown. This automatically pulls up any outstanding transactions associated with this customer. For this example, you notice the invoice dated November 16, 2024. You then set the payment date directly in the interface to January 4, 2025, to ensure that your financial records reflect when the money was actually received. Moving on to the details of the payment method, you select from the drop-down menu the method by which Amy's Bird Sanctuary has paid, whether it's by check, credit card, or bank transfer. Let's select check as the payment method. Next, if there's a reference number such as a check number, you promptly enter it in the reference number field. This detail is critical for tracking specific payments and can be invaluable during audits or when reconciling your books. Let me just put a random number in here. Now we need to specify which account to put the payment in. The Deposit To dropdown provides various options to specify where your payments are deposited, each serving a unique purpose. Choosing checking is common for everyday transactions directly into your primary business account, while savings is suitable for funds meant for future use or savings. For income related to inventory sales, Inventory Asset helps maintain accurate asset values on your balance sheet. Prepaid Expenses is used when you receive payments in advance for services or goods to be provided later, helping track these funds until they are earned. Uncategorized Asset acts as a catch-all for funds that don't clearly fall into the predefined categories, useful for unusual or infrequent types of transactions. Undeposited Funds is ideal for holding payments that you plan to deposit as a single transaction, helping to match your physical bank deposits with your bookkeeping records more accurately. We'll choose the undeposited funds here since the payment method was a check. Below the payment details, you find the Outstanding Transactions section. Here, you'll see the invoice you're dealing with. You click the checkbox next to this invoice to select it. If necessary, you add any relevant notes in the Memo field at the bottom. These might include details about the payment conditions or reminders for future reference which can aid in managing customer relations and tracking payment histories. Once all details are double-checked for accuracy, you click the Save and Close button to finalize the transaction. This action not only records the payment against the invoice, reducing the customer's outstanding balance, but it also updates your accounts receivable and cash on hand in the general ledger. This methodical approach ensures each payment received is accurately documented, enhancing transparency and accuracy in your business's accounting practices. Stay tuned for more insightful tutorials that help you streamline your financial operations with QuickBooks Online. Thanks for watching, and we look forward to helping you continue to enhance your business's financial management.